What's up guys, Bill here. In this video, I'm going to talk about a setup called the Parabolic Short. This is a very timely video because we've had 3 of these setups play out just in the last month on very popular, well-known traded names, SMCI, MSTR, and Nvidia. So I'm going to go through this video. I'm going to talk about what this setup is, why it works, how to spot it, and how to execute it, okay? So we're going to start here with SMCI because I believe of the 3 examples we're going to walk through today, this is the best, kind of most textbook example of the Parabolic Short. And what we're looking for here, guys, as a Parabolic Short is a stock that's up a ton in a short period of time. For a larger cap, at least 50%, somewhere to 100% within the last few days or weeks. The bigger the stock, the longer you can let it, the longer it might take to get up that much, right? If it's a smaller cap, that kind of move can happen in a couple days. And, you're probably looking for more like several 100% of a move over that period of time to start looking for the Parabolic Short. We want something that's up huge in a short period of time. And also, we want something that kind of ramps up in speed towards the end of the move. And what we're going to see here on SMCI is just that, okay? So this is the day that it got its news, basically about how great its guidance was, kind of unexpected, and set this whole thing off. But, initially we see that it's a controlled buying. It's going up a lot, right? But it's not getting super extended from the 9 EMA. It's putting in little rest days here and there and little sideways days. But then we get to this point here where in just a couple days, we gap up big with no retest and gap up again big with no retest. And a couple other things come into play here that help you kind of start to think, okay, this is probably getting close to the Parabolic Short. One is volume. On this last day before the short took place, it put in its highest volume in a long time, even more so than the day when the news broke about the amazing catalyst of guidance. So that's kind of a real tell right there that you're getting close. Now, nothing's 100%. It could have went up for a couple more days and then shorted. You never know. But that's something you look for. The other thing I like to look for is I use the Keltner channels. And this red line is a 5-time extension from the 20 EMA. These stocks, all 3 examples, tended to top right at the 5th extension from the 20. And that's where SMCI did. Okay. Why does the setup work so well? Well, it's kind of like a rubber band, right? You can pull and pull and pull, and eventually it's going to snap back. And stocks do this as well. So all of this buying pressure, and eventually it's getting pulled so tight. There's so much pressure, all these gap ups, and such a huge move in such a short amount of time that eventually it snaps back. Unlike an episodic pivot where you get a big move and it can go for days and days, these Parabolic Shorts are usually more of like a one-day thing. They're going to make a really aggressive, quick move, big move. And then, think about it logically. We're shorting stuff that's extremely strong, okay? And you can see here on SMCI, once it kind of got down to the EMAs again, they bought it right back up. So this is more of like a day trade setup, unlike the EP where you can maybe buy some time on your contracts and get a big move for several days off of it. Something like Root, for example, EP day. Look at that. All right. You're not going to see that with these Parabolic Shorts, okay? It's mostly a one-day thing. And so what are your targets? Well, for me, there's 2 main targets. The first are the gaps. So a lot of the times we talk about at the end of these big runs up, you start to really accelerate the move. So instead of just the nice more controlled climb with the 9 EMA, gap, huge extension, right? I'm looking to start filling these gaps on the way back down. Because these are great targets where liquidity and stops are set, and also they're places where it's great to take profit because there might be buyers here ready to step in on these gaps. And you can see the SMCI filled the first gap, closed the day right after filling the second gap. The next place to look when it really sells off, and SMCI really sold off 20% down that day, is the daily 9. These are just places where these names like to, or these setups like to bounce later on. And it, we got all the way down to the 20 on the next couple days, but it held there and reclaimed the 9. So that's what you want to look for. Now, what you don't want to do with these setups is start to notice that, okay, this looks like it could be a short setup. Let me just buy puts and hope to catch the move down, right? There's a way intraday to trade these with way less risk to reward, or way better risk to reward, and actually getting some confirmation and not just throwing something at the wall and hoping that it works out. Okay. So what we're going to want to do is go down to the intraday chart here. How I like to play these is I look for a loss of the opening range, the 15-minute opening range with volume, okay? And it's going to be a momentum entry. And so you can see here on the day that SMCI had the parabolic short activate, here's our opening range low. So you're going to draw a low of the 15-minute time frame here, and here's your high, all right? Just line already there for a daily or weekly pivot. And you can see that SMCI pushed a little bit that day and then started to sell. And when it started to sell, the volume really started to increase, right? Especially as it started pushing below opening range low. This is where you get in, okay? And your stop would be like a reclaim back into the opening range. That's how I would play it. You can use the 9 and the 20 as well. We use these a lot, right, on very strong trading moves like we do with the episodic pivots on even the 1 minute time frame. They're very well respected. I'm going to use the 5 for this. And you can see here that the EMAs are very well respected. Once again, we get the majority of the move in the first 20 minutes. But once we start to consolidate and buyers start to step in, they still can't get it past the EMAs, and we make new lows off that. And that's how we're playing it. And we're taking profits at gaps, or anywhere else on your chart. I'm definitely taking the biggest scales at the gaps. And if it happens to be a huge sell and we can get back down to that daily EMA, I'd be all out there. But if you've got other places on your chart, previous resistances you're thinking may turn into support, GEX levels, dark pools, anything like that, you can take profits there. Okay? So that's SMCI. There's a couple other examples we can go over. The next one was MSTR. We can see here that SMCR starts getting some momentum off of earnings, comes back, tests the EMA, big stick, gap, more pressure, more buying, huge gap. And what do we got? Highest volume of the entire run up on this extension here. Okay. What else do we got? It's right at the top of that Keltner 5 extension. Okay. And then next day. Now this one, unlike some others, it doesn't pop over that previous candle. It actually gaps down a little bit, but it pushes back up that next day, tests this big weekly level, and sells off. So let's go down to the 5 minute and check it out. All right. Here's your opening range low and your opening range high. It tests the high of the opening range and starts selling. And you notice that the volume starts to increase. And then we get down to the opening range low and we start pushing through it and the volume's increasing. Here's your entry. Nice flush right away. Actually, some buyers step in right away, but it's on lower volume and it rejects our trusty EMA, makes a new low. Okay? Here's a gap start. This is where it finds support. or the gap fill, I'm sorry. Here's the gap start. So once it starts to fill this gap, I mean, it comes a few cents away. This is where buyers step in. I traded this name, and this is where I was out 90% of my position here. And I saved some just in case it could keep going and get down to that daily 9 EMA, but it never got there. Right? It didn't quite get there. It was all the way. It would have needed to push all the way down here, but it stopped, there. And, so just another great example. We're basically just looking for the, intraday, when we're looking to execute, we want to see volume coming in on the sell candles to get us ready. And once it loses that opening range low, that's where we're getting in, and we're looking for it to flush pretty quick. Respect those EMAs. If it bounces back up right away and they close a candle back inside the opening range, that's a failed short. Okay. And it's just not ready yet. You don't know when these are going to happen. You just start to notice the patterns and say, okay, it's starting to gap up. It's really moving. It's very extended. Are we getting close to the Keltner tops, that 5 extension? Are we getting really far from the 20 EMA? Is more volume coming in? Then maybe it's time to start looking for these. Last example, and this was from Friday, really fresh example here, is Nvidia. Nvidia, it's just such a strong stock. It's so fundamentally sound, a little bit more so than the other examples, way larger float, right? Especially larger than SMCI. So this move was more measured and controlled. But even with Nvidia, we start to see with earnings, we get a big gap, another gap, and we're just getting pretty extended. And when we popped up here Friday at 974, that put Nvidia up 100% just this year. So that's quite a lot for a stock this size to make that type of move. And what else did we have? Right up there at that 5th extension on the Keltner. Okay. So let's check out Nvidia. Excuse me. All right, Nvidia on the 5-minute. Here's our opening range, low and high. It pushes through. It actually starts to, looks pretty strong to start the morning. Trading well over the EMAs. Nice buying volume on that candle. But all of a sudden, it starts to fade. And look what happens when it starts to lose that opening range low. Here comes the volume, and here comes the flush. And it flushes quick and pretty hard, but you can see there's buyers trying to push it because this is a really strong stock in the most popular buy on the market. There's so much historic call flow for this. No one's trying to short this name, but look, it still works. Okay. This setup is very powerful when it's timed right. And you're not just slapping puts days ahead of time, hoping you catch it. Okay. You use this intraday execution strategy. It's going to help you and save you a lot of headaches of getting stopped out over and over again. We see good respect of the 9 EMA. Okay. We come down. Where does it start to actually find a little bit more support and eventually overtake the EMAs? It gets into the middle of that first in the most recent gap, the bull gap, right? That's why these are my main targets. Now you could be happy taking profits at 900. Who's going to fault you for that? Scale along the way, scale it while you're happy. Again, these moves are quick and usually one day, unlike the EPs that can be days and days of gains, and you can, 20x your risk. These are still great opportunities, maybe 5, 10x. But it's usually one day. Okay. And it's not super smart to just keep holding stuff on these moves, in my opinion. Okay. This is how I play it. But hopefully that helps, guys. A really great setup. They don't come around a ton, especially if you're more of a large cap trader like me. Small caps are not my thing. I'm guessing they happen a lot more in that world, but, either way, hopefully this helps. If you have any questions about this, just leave a comment or find me on Twitter and I'll help you out.